Welcome to the Moving Home with Charlie weekly workshop with Charlie Lamdin and guests. Live at 8 p.m. every Wednesday. This show is here to help all home movers of the UK be better prepared for dealing with the gauntlet that is trying to move home.
Helping make sure everyone has a home.
Whether you're buying, selling or both, it's a live show. So if you have a question about your move, pop it in the live chat. In the meantime, sit back, have a noisy slurp of your drink and enjoy the show.
Sorry, I can't resist it. I don't know about you guys. That really puts a smile on my face. I'm so excited. Welcome to the first ever weekly workshop. Wednesday weekly workshop. Moving Home with Charlie Wednesday weekly workshop. And it's the first ever because I'm committing to doing this every Wednesday night at 8 o'clock without fail. So if you are moving home and you're right in the weeds and the thick of it, and you're coming up with questions and problems and not sure what to do, this is the show you need to watch. It is the UK's biggest home moving show. It's the UK's biggest home moving live show because it's the only one. There isn't, all the other ones are about investment. This is the only actual moving show where we don't talk about investment. We talk about getting a home. That's the goal, for everyone to get a home. Just over 2 years ago, this channel had 200 subscribers or so. And we're about 22,000 now. And in that time, it's just been a chaotic, wild, fun ride. As I have shared my background within the property industry of the last 25 years with everyone in an attempt to try and help you make sense of the market and moving home. I've never been an agent, but I have been designing estate agency software systems and selling them and consulting and advising estate agency businesses for nearly 25 years. So there's nothing I don't know about how they operate. I've had every single kind of agent there is as a client. And I am here to help level the unfairly tilted playing field between movers and agents, because it's a game. And on the movers side, movers are coming to this game with zero or very little experience, and the agents are doing it all day, every day. So the odds are stacked in their favor. And unfortunately, that means that most movers, and there are thousands of you every day that this applies to, are being eaten alive without even realizing it by the dodgy and shady practices that some, but not all agents are guilty of. So I'm here to help not only buyers, not only sellers, tenants and landlords will do in a separate video, but I'm also here to help those agents who deserve your business to be more easily found. Because I've had the pleasure of working with real, compassionate professionals who actually care about their customers and getting them moved. And over the years, predominantly those are the kinds of agents who've been my clients. Not all of them, and I've seen the best and the worst of agency. And I'm here to dispel the myth that all agents are the same and it's easy to sell a house. Those are the two most foolish assumptions that sellers make that leads to them sitting on the market, not being able to sell, or having a deal that falls through and not be able to move on with their life. Selling homes in a sensible time frame at the best price the market has to offer is a complicated job requiring very high levels of skill. And I'm here to help sellers and buyers. So I'm not on anybody's side. Actually, that's not true. I'm on the side of good agents. I'm on the side of moving. More moving helps everyone. The healthier the moving market, the better for everyone. Nobody loses, everybody wins. And that's why I'm here to help buyers as much as I'm here to help sellers, as much as I'm here to help agents also do more transactions, because by doing more transactions, not only are you helping people and society as a whole with social mobility, but you're helping yourselves with more transaction volumes too. Right. The next thing I want you to know about Wednesday's weekly workshop for movers is that this is where we don't talk about house price indices and the economy and politics and all of those things that do affect the housing market. I will be doing that in another video, probably on Mondays. certainly be covering that stuff in the 5 Fact Friday email newsletter. If you haven't already subscribed to that, there's a link below to do that. That's a free newsletter every week where you get the 5 most important things that have happened each week affecting the housing market to make sure that you are in the loop on what's happening with your move, and you're armed with the information that you need to make sure that agents can't pull one over you, because plenty of them will try, but not all of them. I'll keep on saying it. The good ones are out there. You just need to find them if you're a seller. And the other thing to remember is this: good or bad, the job estate agents do is extremely important. Whether you like them or not, whatever you think of them or not, whether you think it's easy or not, it is extremely important. It's important that it's done well, and not enough agents do it well enough. Very few do it very well. But if it's done well, as you'll discover with our first case study of the evening, which is a seller having real problems, when it's done well, you can move on with your life. When it's done badly, it turns into an absolute nightmare. And this is not something you get the chance to, you don't get a second chance to bring your house to the market first time to get the best price and move on with your life. In this evening's show, after I've had a bit of a ramble, but I'm promising not to ramble in this show, but I'll do my best. After I've had a bit of a talk about the market, the first guest is going to be Perry Power, who's going to be talking about how these sellers who've so far been let down by 2 agents can now move on to try and get their house sold without looking desperate. After that, we've got Lewis Shaw, mortgage broker extraordinaire, who I've been working with for a couple of years now, who's helped lots of you get your mortgages and get into homes, to talk about what's happening in the mortgage marketplace. That's live, and he's here to take a couple of questions, depending on how much time we've got. And after that, we've got what we're going to have as a regular weekly slot, which is Stig Says. And it's whatever Alex Groundwater, my friend, Housing Stig, those of you who've been watching for a while will know who I mean, it's whatever he feels is relevant to have a rant about in what's happening in the economy that's going to affect the housing market. Okay, now, one more bit of housekeeping before we get into this, which is that the whole idea of this, and the reason I've called it a workshop, is because I want it to be as live and as interactive as possible. So first and foremost, we are looking for your live questions in the live chat. So whether you are watching on YouTube or X or Instagram or Facebook or Twitch, we can see your live questions. So please type the word question in. Try to make your questions about the topics we're discussing. If you can, they'll be more likely to get answered in the show. Now, if you're not watching this live and you're watching it after, what I'd like to do is to say that please put your question in the comments, and the question that gets the most likes in the comments under the video on YouTube will be the first question I answer next week. All right? So the best question, as judged by how many of you like it and click the like next to the question in the comments, will definitely be answered each week in the next video. Now, if any of you are happy to send in your questions by video, that would be fantastic. I want to put video clips of you guys on the screen. I want to bring the show to life and start to get more of you engaging with video and audio. You don't have to divulge your identity, but you can put your questions in by video or audio. Those will always take precedence over other questions. Now, again, this is just an abnormal amount of housekeeping in this video because it's the first one. If you are a mover and you want my direct help, what I don't have time to do is to answer private emails and private messages individually for free, because they always get quite long and quite involved. Okay, I don't have that because every time I do that, I'm taking away my time from helping large numbers of people. However, if you put them in comments or on X or on Instagram and it's a good enough question, I might feature it in the show, or I might feature it in the live Q&A that I'm going to be doing on Mondays. And the live Q&A is about the market and the economy and politics and anything else, right? So that's the general housing market live Q&A, which is not Wednesdays. And And now I've lost my train of thought. Right, so that's how you can help me. Now, if you are on the move and you like direct access to me for help, I have the live private movers Q&A club. Now, that's currently £15 a month, and it gets you two things, which is guaranteed responses to your private messages, where you can explain the situation and ask me your question, and I'll do my best to help you figure out the answer. And as of next Wednesday, which will be the 9th of October, immediately after this weekly Wednesday workshop, I'll be having a live video conference, not recorded, not a live stream, but an actual video conference where all members of the Live Movers Q&A club can actually attend and be in the video conference with your cameras on, preferably, but also just audio if you prefer. So that's going to be twice a month. So being a member of that club for £15 a month, you'll have access to me directly in that live video conference. Private, it's not published, and it's not going to be published. It's not recorded, it won't be published. It's just a live video conference for members only. Okay, and that's cancel anytime, join anytime, cancel anytime, and the first one of those is next week. The link to that is below. And one other thing before we get into the moving questions properly, is that a lot of you, my videos when I talk to Alex Groundwater, my old school friend, my lifelong friend, Alex Stig Groundwater, the hunter of truth, the seeker of truth, and the debunker of bad data. Those are often some of the most popular videos I do. There's certainly some of the fun videos I do, but they're not directly helpful for movers. And they have a slightly different demographic of audience, which is more the investor type. So because you guys have got so much money, that's now going to become a paid member group only. And I'll put this up on the screen now so you can see both of these two members clubs, which you can get to on my Buy Me a Coffee club. The link's below. Right, so here we've got them. So on the left is the private live Q&A club, okay, where you'll have direct access to me in the video conference twice a week, and a guaranteed response to private messages, and you can leave anytime. And on the right, you've got the Charlie and Stig show, which will be twice monthly. Now, that will also be immediately after this Wednesday Movers weekly workshop, week shop. So basically, it's going to alternate each week. 1 week, it'll be the private Movers live Q&A. And then the week after, always on Wednesdays, it'll be a private, the Charlie and Stig show. Me and Stiggy talking for as long as we want to. It's going to be at least an hour of us just talking about the market, the economy, jobs, crypto, GDP, all that kind of good stuff that gets into really good conversations. And hopefully, if you enjoy our conversations enough, we're not expecting a vast audience there, but we'd like to be able to, and also it'll be completely unrestricted. The language will flow like the wine does. So that's there. And the first one of those, the first Charlie and Stig show, is going to be 2 weeks today on Wednesday, the 16th of October, which will be just after the budget. Just after the budget. So that's going to be a good one. All right. So let's stop sharing that. And now let's get into what I wanted to talk about. And again, as this is the first of the weekly workshops, I would like to begin by acknowledging the fact that moving home in the UK is unbelievably difficult, very expensive. It's more expensive to buy a home in relation to wages than it almost ever has been. I think it's 180 years. Very modest marginal improvements in affordability at the moment, but overall, it's a shockingly difficult and expensive time to be buying a house. It's equally shockingly difficult to sell a house right now. The time taken to sell a house at the moment is somewhere between 5 and 6 months once you've found a buyer, right? But, and this is the point, and this is the point of this channel, if you know what you're doing, it is entirely possible without any changes to the law for a house to be sold in 7 days. It's possible. It's right now, it's not likely, but it is doable. And if you're a seller that knows what you're doing, you're prepared. And if you're a buyer who's prepared and you find each other at the right time, there's nothing stopping you, if you've made the right choices and you're properly prepared, from doing transactions in 7 days. Now, 7 days is quite extreme, can be done even faster than that. But 14 to 28 days is entirely feasible. Now, that's assuming you're not in a chain, of course. There are chain restrictions that cause problems that are outside everyone's control. But I want to make sure that every single one of you buying or selling understands this game that you've got to play well enough that you don't lose out when you're playing. All right? Now, why are we in this mess? It's important to understand why we're in this mess as well. There are three things that affect the state of the housing market. Number one, all the time, always, right? These three things are the three biggest things that affect how difficult it is for you to find a home and how difficult it is for you to sell a home. Number one, policy making. Government policies going back decades have had more influence on what's happening in the housing market right now than anything else. In fact, more influence than everything else put together, right? Government policy. And so for everyone who's outraged by the cost and the difficulties and the pitfalls of housing, number one culprit is successive government failures, bad policy, failure to enforce existing policies, adding in new policies that make things worse. It's been an absolute shit show going back 30 years. Number one. Number two is the state of the economy. Now, whilst that's also affected very much by policy, we ostensibly have a free market economy in the UK. And the economy affects house prices. And what happens to house prices affects people's decisions to move because it affects your risk of moving. Now, it's not necessarily the financial risk, it's whether or not you can move when you need to move. And if the economy has gone against everybody and has affected the housing market, it makes it impossible to move. So it's worth understanding. And that's why I do tend to talk a lot about the economy in this channel. And especially on X, where I talk about the housing market, I talk about the economy a lot because I really think that people need to understand how the economy affects their future. Because buying your house now is just step one if you're a first-time buyer. You're going to have future life events that require you to sell or move. And the decisions you make on your first purchase will ripple into eternity of your life. So you've got to understand how the economy affects the housing market. And that's another reason for this channel's existence, okay? Number three, so number one, policy making by the government. Number two, the economy. Number three is the moving game, the moving industry, the way it's played, the people who control it, the manipulation, the underhand tricks, the dodgy deception, the conditional selling. I mean, it's such a snake pit. And it's not, don't think I'm just talking about agents. Agents, mortgage brokers, buyers and sellers, landlords, developers, each one of those groups of people has snake pit type operators in them. And what you need to know as a mover is how to navigate that and avoid falling into the snake pits. And that's the other thing that I'm here to help you do. And that's what I'm doing on these Wednesday weekly workshops, is helping you navigate the moving game. This is not about whether you should or shouldn't move. That we'll do on Mondays and maybe on the Friday in the newsletter. This is about navigating the game. Okay? So, one last comment about the big contributing factors to the state of the housing market today. Buy-to-let mortgages became available to individual investors about 30 years ago. And it led to, I'm not here to discuss the pros and the cons or the rights and the wrongs of it, but the facts of it are that it led to a huge increase in what are known as retail investors and amateur landlords buying up properties that would otherwise typically have gone to first-time buyers, and have resulted in a shortage of supply of first-time buyer type properties over the years. And it also resulted in prices going up more than they would. So that's number one, 30 years of buy-to-let mortgages. But as you can see at the moment, government policy is having some effect on that, and that seems to be being unwound. Good or bad? That's for a different video. We'll talk about that soon. The second thing, after the global financial crisis in 2008, the housing market flatlined for about 5 years, both in activity terms and in price growth terms, until George Osborne decided it would be a good idea to use government money to help people buy new build houses. And the government was lending 20% towards the value of new build houses. And in London, that went up to as much as 40%. And that had the effect of turbocharging house price growth, because guess what? House builders were able to charge more money, which is why some people called it, it's not help to buy, it's help to sell. It's help house building shareholders and house building companies. Now, was it effective? Yes. Did it help first time buyers into more new build houses? Yes. Did that work out well? No. No, it didn't. No, it hasn't. It's worked out very badly. And a lot of people who use Help to Buy are now trapped in Help to Buy properties. So buy-to-let mortgages was the first thing. Help to Buy from the government was the second thing. That's now been ended. That was ended about a year ago. And the third thing was ultra-low interest rates making very, very cheap mortgages for such a long time that an entire generation of people thought that it was normal. It was normal for the Bank of England base rate to be 0.000 something percent. And money would always be that cheap forever, and house prices would go to the moon, and it would be happy days for everybody. No, what's happened there is why we're feeling the pain now, okay? And that is unwinding now that interest rates have gone back up. Also, council homes being sold off without being replaced has made the situation worse. Also, planning, very outdated planning permission policies, but allegedly that's going to be fixed by the new government. We'll see. That's for another video. But that's why we are in this godforsaken shit fight of a mess when it comes to the housing market. That's why it's such a godforsaken shit fight to buy a house at the moment. And that's why it's an even worse godforsaken shit fight if you're trying to sell a house. And with that, I'm going to go on to our first segment and feature of the day. And after that, I'll be bringing Lewis Shaw on to talk about mortgages, okay? But I put this question. So this is the situation I had. I had a question from a seller who I spoke to this week. And I put the question to one of the agents I know, who's one of the best and most impressive agents I've ever worked with and know. Here's the situation. 5 years ago, these sellers bought a new build and lived in it with their 2 teenage kids very happily, and they love the house. 5 years on, 2 things have happened. Their teenage kids have grown up and left the house, so it's bigger than they need. And secondly, their 5-year fixed rate mortgage has come to an end. So in February of this year, before they discovered this channel, they went out, they chose an agent. They thought they were choosing wisely, but they didn't. They chose poorly, and they went with an agent who got basically no viewings. And they put it on as a 4-bedroom detached house with a garden, a new build, and they put it on at £550,000. They then discovered my channel and saw the advice saying, if that's what's happening, change agents. Now, unfortunately, when they changed agents, the agent they changed to was because they really liked them. They had a house. That agent was selling a house that they wanted to buy if they could sell their house. So they thought it made sense. That agent advised them to keep it on the market at that price of 550 and assured the seller that no, we'll get something. And that was back in around about June. We're now in October, and that house, after a couple of months, the seller went to the second agent and said, we've been watching Charlie's videos and he says that we should lower the price to attract interest. And the agent went, no, it's fine. It's fine. It's just because of the summer holidays. Just wait for the summer holidays to come back. And when the kids get back, it'll be fine. Since then, literally 0 viewings. And when they rang the agent up, the agent actually had the tenacity to say, we're so busy, viewings, so busy. The seller was like, well, why haven't we got any viewings yet? We've offered to lower the price and you've told us not to do it. Anyway, These sellers contacted me and explained the situation. I put their predicament, which is that they now need to sell. They need to sell because their 5-year fixed rates come to an end. Their mortgage payment has jumped up substantially. And whilst they're able to afford it, it's leaving them with nothing. And they want to get out of the house. And they are now realizing that selling a house is not easy. Even when you change agents, it's still not easy because you can sometimes go with an agent that's just very nice, but useless. And they are now at the point where they don't want to look desperate. They know the house has been on the market for a long time. They don't want to look desperate. What do? So I asked Perry, Perry Power of Power Bespoke, which is an agency in Surrey, for his answer to this question. And here's what Perry said.
So there's multi-layers to this, but I'll try and keep it as quick as possible. The issue is the second agent. Yes, we know a lot of agents overvalue, so the first agent may or may not have overvalued to win the business. Whatever, it's happened. The second agent should have really said, I don't know if it's too much money. Give me 4 weeks at the current price, then we'll review. But all this comes down to ultimately is incorrect communication between agent and client. The agent, arguably, could just be trying to do the best by the client, not wanting to reduce the price when it's maybe not necessary. You never do know. No one's got a crystal ball, can predict the future. We're finding here at Power Bespoke quite a lot that we're selling houses 3 or 4 months after they've launched to market, but to somebody who had looked at the details and kind of bookmarked it to view it once their house had gone under offer themselves. So their house goes under offer, then they view it, they do love it like they thought they were going to do, and they end up offering and buying it. So I'm with an agent that says, let's not keep hammering the price. Let's just let us take over the marketing, do what we do, how we do it, and then we can review. The mistake they made is leaving it so long. It's literally a 4-week launch to market, test, push it, get all the team rallying around the properties, give it a good push. If that doesn't produce any good results, then we're probably going to need to look at the price. But the underlying problem here is the lack of communication between agent and client around ultimate goal. So price to me is always a secondary goal. There's always a primary goal, which I call the ultimate goal. And that could be things like, imagine I'm the seller. I would sit down with the second agent and say, look, I obviously want to get the best price for my house. Been on the market since February, very little interest. I'm not adverse to changing the price, but my ultimate goal is to be moved by the end of October. So whatever has to happen, can we keep focused on that ultimate goal? Then the agent would say, I would hope they would say, let's not waste too much time trying to get the elusive 550 that was potentially suggested by an agent who's overvaluing to win the business. Let's go on the market, offers in excess of 500. Let's catalyst it. If it's worth 550, it will get there with my marketing and with my negotiation strategy that we stick to. But let's not waste time if your ultimate goal is to be moved by the end of October or November, whatever it might be. Have to think about ultimate goal first, then put the plan around it. Some clients might say, I won't sell my house unless I get 550, in which case the ultimate goal is different. They haven't really got an underlying motivation, so you can sit on the market a bit longer, wait another month to see if that elusive buyer pops their head up. The market's potentially getting a bit more confident with buyer activity, so it's tricky. I don't want to bash the estate agent. All I would suggest to that agent for future and the client is to not giving it quite so long to test before you amend the price, and tailor the strategy around your ultimate goal. So their best option now is to do just that. Bring the price down to an offers in excess of marketing strategy at the lowest possible figure that they will be comfortable to accept, whether that's 500, whether that's even 475. You really can't underprice a house. Caveat there, as long as you've got a thorough marketing strategy and you leave it in the market, on the market, for a good kind of 2 to 4 weeks before you make a decision. The other thing to consider, does it happen a lot? It happens loads. We've had a client recently that we've taken over the marketing. It was on at 700,000, and I said, look, I'm really sorry to tell you this, but I think the agent's misadvised you a little bit, and you should be on the market at more like offers over 600. And they were like, that's fine. I just needed someone to tell me that. So it happens a lot. Let the decisions be driven by the ultimate goal. Put a plan around that. Because for a lot of people, £10,000-20,000 isn't worth waiting another 2 or 3 months for. And that, as an agent and as a client in your communication, you need to be very clear on that. And if you're a seller that's worried that your agent's just going to try and flog it for the lowest price possible, build in a really good performance-based fee. To say, look, I'm happy to reduce the price from 550 to 500 to offers in excess of 500. But here's how it's going to work. You'll get your percentage fee up to this amount. Anything over that, I'll give you a really nice performance fee. So that's a good way to reassure yourself that your agent's going to really try and get every last penny out of the market without costing you loads of extra wasted time.
Wow. So the key takeaway for me there from what Perry said was you can't underprice a house, with the caveat that it's got proper marketing. And this is the mistake so many sellers make, that they confuse the marketing price or the asking price with the sale price, and the two things are unrelated. And the higher your asking price, the lower your chance of selling it and the lower price you'll ultimately get. So I hope that was helpful. Now, time is marching on, and I've got my next guest coming up. So some of you will probably have heard the news that Nationwide, I think, has now started to offer 6 times your salary as how much they will lend you for first-time buyers, up to 95% loan to value. Now, Lewis is I'll let him describe himself, but Lewis is one of the mortgage brokers that I have been recommending people to for over 2 years now, because I trust him. I only work with people I trust. I don't work with people I don't trust. I can't work with people I don't trust. And if you need or want an independent mortgage broker, and you can't find one, and you haven't found a good, trustworthy, honest, independent mortgage broker, then go to my website, link is below, and pop your details in, and you'll be able to talk to Lewis or the other guys that I work with. But without further ado, let's bring him in. Lewis. Are you there, Lewis? Come in. Hang on.
I am here. Good evening. You're all right.
Good evening. How are you?
I'm well. I've not stopped today, so I'm a bit tired, if I'm honest. But yeah, I'm fine. I'm looking forward to my food arriving, because I can't be bothered. The reality is I can't be bothered cooking anything at this time of the evening.
Okay.
But I'm good, thank you. I'm good. How are you?
Fair enough. No, I know I've had a similar day, so I understand. And by the way, guys, I'm keeping an eye on your questions coming in. We'll get to them. But for now, I'd just like to ask Lewis to talk about his views as a broker about the wisdom or otherwise, the wisdom or folly of borrowing 6 times your income for a 95% loan to value mortgage. Take it away, Lewis.
So the first thing to say is, of course, that no one's forced to borrow this amount of cash. No one's going to get a gun put to the head and say you have to do this. It's a choice. So that's the first thing to say. Is it wise at 95% loan to value? I would say there will be very few, very few people that probably would do that, because that does seem extraordinarily risky. That if the market turns against you, you could find yourself in a pickle very, very quickly. But I don't think there's I have had my mind changed on this. When I first saw that 6 times income was being brought in by another lender a few months back, a good few months back now, I was very critical of it, in terms of this will, increase house prices, this will drive away first-time buyers. But I've had time to kind of percolate, and there are many lenders now doing this. Is it risky? Yes, of course it is. Borrowing that amount of money, effectively, for the vast majority of people, unless your wages rise significantly over the period of time that you're fixed for, depending on how long that is, then you would find it almost impossible to remortgage to another mainstream mortgage lender, because the loan value would be so high, unless you've got, of course, a significant chunk to pay down. So yes, it's risky. But the flip side of it is, if it allows first-time buyers to maybe jump a couple of rungs on the ladder, so that they're not then spending additional costs on stamp duty, on estate agency fees, on legal costs, etc., and allows them to buy the family home first, and they know that that's what they want to do, then I think it's useful in that scenario. It's not going to be for everyone. I mean, there'll be only a handful of people that this would be appropriate for anyway. So I don't think it's inherently bad, but it should be. You should approach it with more caution, definitely.
Okay, yeah, I mean, I agree with you. There are real pros and cons, and I suppose it depends why you're buying and how long you're planning to stay. And I think I completely agree with you. Anything that helps a couple who want to start a family get into a family-sized home earlier, and they're planning to stay there long term, is a good thing, provided they can actually afford it, and provided they have considered the risks of what happens if it goes wrong.
Yes.
And of course, I suppose when you're talking to your individual clients, one of the considerations you've got is what industry do they work in? How stable is their job likely to be? I mean, this is a question for you, actually, Lewis. If I come to you and say, I'm a doctor, and can I borrow 6 times my income? Or I come to you and I say, I work in telesales. Am I going to be viewed differently?
Well, lenders would probably say no. Whether that's true or not, I don't know. They wouldn't necessarily disclose that. Would I caution someone against it? Then yes, if their job was inherently less in demand, potentially, then yes, of course. I mean, but equally, on the flip side, if it was, for example, a doctor and a telesalesperson, yeah, I'd go with that. If it was two, maybe I don't want to pick on telesales people here, but if it was two people where their job, any job that wasn't necessarily in significant demand, and where there was probably a defined career progression where you knew you were going to be taking incremental steps up a salary ladder, it's probably not for those people. No, although it's not going to be, they wouldn't be barred from it, but it would be something to consider.
Well, actually, we've got a question on this. Arthur O'Caithlin says, "What about us toilet cleaners?" Well, that's a pretty safe. You're in a safe.
To be fair, bakers, undertakers. They're the two. They're the two jobs you're always going to need.
Those carsies are always going to need cleaning, so I'd say it's a pretty safe job you got there. And what about? I mean, if it's already hard enough to afford a mortgage, a 95% mortgage payment, which is 4.5 times your salary or 5 times your salary, isn't it? Are they having to make the term longer to make the payments affordable? What's the other downside here?
Well, so there are two downsides. There's one that's a small issue, and there's one that's a really big issue. The small issue is they may have to extend the term over a longer period of time, 30 years, 35, in some cases 40 years, in order to make those monthly payments if they are borrowing that kind of income multiple. The bigger issue is what they go without when they're stretching everything to pay for the mortgage, and that's things like life assurance, income protection, critical illness cover. Because actually, if you're going to be taking out a significant multiple of your income, then you have to really seriously consider those insurances, because if something goes wrong, you are screwed. There's no two ways about it. You're absolutely screwed. And the problem is that when a mortgage is eating up so much income, then the protection that goes alongside that to make sure that you're looked after in the event that you can't work due to ill health or sudden death, etc., those kind of things, that goes out the window, because it's all about the mortgage, and yet they're the ones that are most at risk if something like that does go wrong. Admittedly, they're going to be younger people, and hopefully you would think that is less likely to happen, but I shared a story on Twitter the other day about my niece, who's only very young, with brain cancer. So there's no guarantee that that's not going to happen. I mean, she's 25, so there's no guarantee that wouldn't happen, So that's the consideration. It's very much a case of, if you can't afford the insurances that you really need to go along with this, then you can't afford the house, is the reality.
Okay, that's really interesting. We've got one question on this from Ollie Laking, who says, "Is there a reason not to extend the mortgage repayment duration far beyond the old average of 25 years, provided you're not overreaching on affordability?"
Is there a reason not to extend?
Yeah.
Yeah, I mean, the shorter the mortgage term, is the reason not to extend. Yeah, so the longer the mortgage term, the more interest you'll pay in total overall. And it can, between 25 and 30 years, it's noticeable. Once you get above 30 years, especially if you've got a high loan to value, it becomes dramatically different, especially when you go up to 40 years. Because the mortgage payments are smaller, of course, you're paying interest longer, and therefore the proportion that's being chipped away at the capital each month, if you've got to say 35 or 40-year mortgage term, is much lower. And therefore you can end up paying tons more interest. But on the flip side of that, you get a house at the end of it. So it's horses for courses. If you can afford to keep the mortgage term as short as possible, 25 years or sub 25 years, great. But with interest rates where they are, with house prices where they are, that's an impossibility for most first-time buyers.
Got a great question here from a first-time buyer. Snev on YouTube says, I'm a solo first-time buyer who has a considerable deposit, around 30%, and my salary is below 25k. Would borrowing 6 times my salary be a good idea in order to buy a house instead of a leasehold flat? My parents can help.
Sure. So if you've got a significant deposit and it keeps you away from an apartment, then yes, I would say that's a better choice rather than some of the horror stories. That's not to say that all leaseholds are terrible, but there are significant horror stories and many people have been caught out. So yes, if that means you're going to have a significant amount of equity, if your job is stable, I would always favour a home over an apartment, personally, a house rather over an apartment, if it's affordable. Now, specifically with the nationwide piece, there are minimum income levels to hit that 6 times income. But there are other lenders out there. Perenna is one. April Mortgages is another that offer 6 times income without the stipulations of being first-time buyers or having minimum income requirements or onerous in minimum income requirements, I should say. So there are other options. However, with those other options such as Perenna, you're then fixing for the lifetime of your loan, not for 2 years, 5 years, 10 years. It's 25 years fixed, 30 years fixed, etc. And there are obviously considerations in there as well.
Okay. And just if you have got a couple of minutes to tell us about what the overall environment of the mortgage market at the moment, the mortgage marketplace. I mean, it feels like there's fierce competition. I mean, we did see a big uptick in mortgage approvals, and the Bank of England figures out a couple of days ago. I mean, it's down from the month before, so it's July figures, and it's down from June, I think.
Yes,
it might be August, can't remember, but anyway, but it's about 40% up on the same month last year, which is, that's good to see some life coming back, a pulse reappearing in the housing market.
For sure. I mean, it's been, last month was incredibly busy. Like, it just took me. I mean, August was busy, which is ordinarily quiet. Last month was unbelievably busy. I almost killed myself doing it. But so I think what's happening is lenders are seeing that there's a significant throughput of volume in terms of new agreements in principle, new applications, and that's likely to continue if interest rates fall. And so now they're battling it out into Q4 to get the market share, and that's where the competition is being driven from because they've had a couple of years. All lenders have had a couple of years where, of course, applications were down, and therefore they're worried about market share, especially the bigger boys, your HSBCs, Halifax, Barclays, Santanders, those kind of guys. So they're now, kind of fighting out for market share. And today I've had an email from HSBC that they're dropping rates, I believe, tomorrow. Santander are having another go at it on, I think, Friday. And there's just constant wave now of not huge reductions, snipping away, but just all they're trying to do is undercut one another to sit at the top of the sourcing table, top of the rate table for that very clean, very straightforward business where, they've not got much margin, but it's boosting their lending targets, which they'll have to present to investors at some point next year.
Right. Yeah. I mean, I saw, I had a look at the Nationwide Building Society annual report, and I was fascinated to see that their profit margin has come down from about 1.7% of whatever the client's rate is paying. It's down to less than 0.5% now.
Yes.
Which Ian from Perenna said that's loss-making business. He said they're not really making any money at less than 0.5%, because that's their gross margin, so that's not covering their overheads, that kind of stuff. And it's fascinating. I mean, I think that despite the fact affordability is bad and not really improving very much, in terms of income multiples to house prices. At the moment, it's gradually creeping in the buyer's favor, isn't it? It's as a borrower, you've got a bit more choice. There's a lot more competition, and house prices
sure.
are not. I know first-time buyer prices aren't coming down as fast as prices higher up the market are. Higher up the market, prices really have come down quite hard and continue to come down. But I think for a lot of buyers, the question they always ask is it a good time or is it a bad time? It's not a bad time to be looking from the point of view of actually there's no rush because prices aren't going up. I know Nationwide said that they're up 3% year on year, but they're really only moving very small amounts at the moment. Having said that, I still have the worries I've always had about where the economy is going. And so it would be, do not overpay. Buy, you need a home, you're going to stay there and you don't need to move for at least 5 years, but do not overpay.
I mean, certainly with regards to the Nationwide, they kind of margin down. You're right. I mean, Ian's right in terms of that's not profitable. The vast majority of mortgage lending for mainstream mortgage lenders isn't profitable. It's subsidised by not having to pay interest on retail deposits. That's how their business model works. If we actually got the true cost of mortgage funding, you would then see an actual real rate of return on your current account at kind of 0.5% below base. But with regards to margins, their margins are down. But I would say this, prior to, so for example, remember, just during COVID when we had really stupidly low rates, below 1% stuff. And let's say you took a 1% mortgage rate. The swaps at that point in time were about 0.05 or 0.1 at best. So they got approximately a 90 to 100 basis point, so 1% margin between the swap and what they were retailing at the lower loan to values. And the high loan to values, they got a bigger margin. What happened when, of course, inflation took off, and then specifically when the mini budget came out and mortgage rates, we had that spike where, yes, mortgage rates were rising up anyway, but that spike was deliberately caused by the mini budget. There was a noticeable change, and they shrunk their margins. And I know it's very popular to batter banks and building societies and all the rest of it, but actually, when it mattered, the reason their margins are worse, I think, because of course that's from trading, 12 months prior. What they were doing, in effect, was mitigating some of the impact. So they shrank their margins, all of the lenders across the board, because if they'd have passed on that kind of 1% margin, then we wouldn't have been seeing 5 and 6, would have been seeing 7 and 8% mortgage rates, which would definitely have tipped everyone over the edge.
Listen, can I cut you short? We're running out of time, and I want to get one more quick job in here. And I'm going to try to answer this, not as a broker, and I'd like you to give me marks out of 10 for how well you think I've answered it. So Will Marsh on YouTube asks, is it worth getting a mortgage broker if your circumstances are relatively simple, e.g. a secure job? That's a really good question. And the short answer for me is it's always, no matter what your circumstances are, it's always worth talking to a broker for the following reasons. It's not just about the rate that you get for a mortgage. It's not just about how much you can borrow. Every single different mortgage product has got a whole list of different terms. Is it portable? How long does the early redemption fee go for? What are there are so many different things that are designed for people at different times of life. And so if you don't talk to an independent whole of market broker, you might not know of a product that you've missed out on that would have actually suited you better. It may or may not have been the same or more in terms of repayments or rate, but it could have had different benefits to you for your life plans. For example, if you know you're going to be moving within the next 2, 3, 4 years, compared to not moving the next 2, 3, 4 years, you might want to look at different products. So in my mind, although it can be easy to go to your existing bank because they're also a mortgage lender, they know you and they love you, and they go, hey, when can we give you a mortgage? When can we give you a mortgage? And it looks like a really competitive rate. That's only the first thing you should be considering. There's a long, long list of other things to consider because a mortgage is one of the biggest commitments you'll ever take on. In fact, mortgages tend to outlast marriages most of the time, Lewis, don't they?
They do, yeah.
So when you're saying "I do" at the altar, remember your mortgage is probably going to last longer than your marriage. Sorry, them's the statistics. And I joke, but actually it's a serious point. What happens with a mortgage product where Lewis, are there mortgage products that are more suited to that situation happening than others? I bet there are, right?
I mean, well, exactly. So we've got this big. We're very rate sensitive, understandably so. But we're in the UK. We're extremely rate sensitive, and that's what most people want to focus on. And it makes sense because it's easily understandable. If that rate's lower than that rate, well, that's going to be cheaper, and therefore that's better because I'm not spending as much cash and not being charged as much interest. That makes sense. But I was talking to a chap the other day actually, who's launching a product in the not too distant future, and he's been doing some research, and it's around financial literacy. The general population. And his research has uncovered that something like 73% of UK adults are significantly below average when it comes to financial literacy. Now, will may be different. That may not be the case, but you've got to remember that this is a big financial and legal piece. There's an awful lot of law and an awful lot of regulation that sits behind it. So it's not just about the cheapest rate. So, for example, I'll give you a cast iron example of why. A couple buying a home. This is a real life case I had. A couple buying a home, and they said, "Well, we're moving here, but if we're fortunate enough to get our son into X school, then we would want to move." I said, "Okay, so what you need to do is you want to be able to port the mortgage." Yeah, okay. Now, there was also the possibility that Mrs. would take a reduction in her hours at some point if they had another child and not go back to work full time. They had one child, so it would have maybe they've had a child, maybe they wouldn't have had a child, but it was on the cards. I said, well, what you want then is you want a lender that's going to allow you to port, but not then do another affordability assessment when that comes to pass, because there are many lenders when it comes to porting, for example, where they'll allow you to take the rate with you, but it's effectively like a fresh mortgage application. They still want all the documentation. They still want to check affordability. And if it doesn't fit, then we're not porting it. Whereas I said, okay, well, let's go with this lender because I know that when it comes to porting, as long as you're not borrowing additional cash, then they're going to let you move. Even if both of you are out of work, they would let you port it because they underwrote you at the start of the mortgage and are not fussed now. So that's just one kind of, but I don't want to get into too many technicalities, but it's more about just the rate. But not only that, it's also about who do you turn to when things go wrong.
Yeah, absolutely.
Because the bank aren't going to pick the phone. The bank they're not going to listen to you in the same way that a human would, because you're just a number. They don't care. It's the reality.
I've got to wrap up. I've got some good questions I want to answer. I've got to go back to some sellers who've got some good questions here. James, Sky, Leslie Ann Chinnery, Mad Max 2000, and someone on X called The Internet. I've got questions. I'm going to answer your questions in a moment. But I'd like to wrap up with this, Lewis, on that point. I think we've answered Will Marsh's question there, right? You are human, and therefore all of the potential things you just described are going to be happening to you: marriage, kids, job. It doesn't matter how good your situation is right now. It's the future that matters. And that's where an independent broker. But the crucial thing is this, and this is the thing that you never hear talked about, and I'm making such a big deal about, and it's why, Lewis, you and I have been working together for 2 years, and along with Hudson Rose as well. You can't just go to any broker, because what is very difficult to judge as a first-time buyer is, what is the quality of the advice that you're getting from that broker? And you don't know if you're a first-time buyer with no experience in this. And this is where it's very hard, but you must choose very, very, very carefully. So I haven't got time to go into it now, but I would recommend anyone talk to an independent whole of market broker for all the reasons that we've just discussed, but not just any. Ask around and find out who is trusted. Okay. Anyway, Lewis, thank you, mate. Thank you very much. Have you back here on a regular basis. Thanks for your contribution. And guys, if you want to talk to Lewis, please remember, I'll just pop the URL on the page quickly here. Go to this URL, mhwc.co.uk, which is Moving Home with Charlie, /mortgage. Pop your details in there. And if you particularly like to talk to Lewis, mention that in the comments. Otherwise, either Lewis or Hudson Rose will be in touch with you. Lewis, I'm going to have to say goodbye to you. Got to go with the other questions before I run out of time. Thanks, mate. Talk to you soon. Lots of love.
Bye-bye. Bye-bye. Bye-bye.
Right. So next up, hang on a second. Let me just get rid of Lewis. Next up. I want to answer some of these questions because there's some good questions you've got here. So, James Sky. Evening, James. How does one respond to an agent who says the seller wants the asking price? So this is a buyer question. How does as a buyer, how do you respond to an agent who says the seller wants the asking price? Okay, I can give you two different questions. So two different answers to that question, right? Number one, well, obviously, yeah. Okay, 10 out of 10 for stating the bleeding obvious, Mr. Agent. The seller wants the asking price. But that's got nothing to do with what the house could sell for, has it really, in reality? And too many sellers are led into the situation of thinking that they're going to get what they want. Because I have heard agents say, how much do you want for it? The seller says, they go, great, okay, we'll work with that then. The agent says it just to get the business. But the serious answer to this is, if an agent was to say to me, if I was buying, the seller wants the asking price, I'd say, okay, I understand that, that's fair enough. But you, as an agent, know as well as I do that the market determines the price for the house. And the seller may not want to accept the market price. But do you agree that the market will determine the price that the house sells at? I'd ask that question. Is it the market that determines the price, or is it the seller that determines the price? I acknowledge that's what the seller wants, but what seller wants isn't what seller gets, especially in this market. So yeah, again, not being flippant, I would say to the agent, I understand. Of course, I understand that's what the seller would like to get, but it's the market that determines the price, isn't it? And I would just put the ball back in the agent's court. They can't say anything other than, yeah, it is the market. And so at that point, I'd say, so what other offers do you have? Because if you've got no offers, there's no market for this house yet. And if you've got other offers, that's the market. Are they proceedable offers? Because if they're not proceedable offers, then that's not the market. The market for the house is offers from a proceedable funded buyer. And that's what the only price a house will ever sell for. And I'll repeat a phrase I've heard from a great agent friend of mine, which is there are three prices. There's what you want, Mr. Seller. There's what I think as the agent, and there's what someone will pay. And what someone will pay is the only one that actually matters. Right. Thanks for that great question, James. On and on to the next question. Leslie Ann Chinnery. I am a seller. How many chances do I give my agent? Since April, only 6 viewings and no offers. How many chances do you give an agent? You give them one. You give them one chance. If an agent does not achieve a sale at the market price within the time frame that you've specified, they have failed, and there's no reason to stay with them. Even if they're very nice people, even if you like them, they have failed you in their professional task of achieving a sale for your house. And whether they like to admit it or not, it means they're not good enough. Either they deliberately misled you on price and overvalued it to get your business, or they're genuinely incompetent and very nice, but incompetent. So nobody should ever give an agent more than one chance if selling is important to you. Now, if selling is not important, it's actually not in any hurry, and then fine. It's up to you as the seller to decide. If you want to decide to stay with your mediocre agent, you're going to end up with a mediocre price and a mediocre experience, and probably a mediocre chance of it falling through as well. But generally speaking, when you engage a professional to carry out a professional task for you, they should deliver on that professional task. And if they don't, you should go and find someone who can. And you should be as ruthless in that pursuit of a professional agent to sell your home as agents are ruthless in getting your business in the first place, signing you into a long solicited contract, having, in some cases, not all, willfully misled you on the price expectation. So Leslie, and talk to at least 2 or 3 other agents. Generally speaking, agents whose name is above the door and own and manage business have more reputational risk of not selling your home and have more to gain if they do than larger corporate agents. That's a generalization. There are exceptions. There are plenty of bad agents with a name above the door as well. But You need to go to someone, you need to say, I understand that the market will set the price for my house. What I want to know is, what is your process for discovering the market price by getting competing buyers? No competing buyers, you do not have the best price for your house. All right. Mad Max 2000, hello there. Charlie, do you think the renter's bill may mean cash investors may buy and leave them empty? No. In a nutshell, I don't think that would do that. No. That's a discussion for another time, but no. Now, the internet with a blue heart on X says, my partner is trying to sell her house in a small town in Cambridgeshire. It's a nice house. She priced it at 320,000 and then dropped to 300,000. No interest, no viewings after 2 months. Lots of other similar houses on the market, and an agent said it's a buyer's market. People are making silly offers. I've talked to her about your approach, and my approach, of low price getting competing bids, but a local agent said that might work in busier towns, but it just doesn't happen in the sticks. Can it be made to happen? Okay. The price on its own doesn't always solve the problem if you want to make sure you get the best price available. I don't agree with that agent, because there's always a market for a property at the right price. I don't know what the market price for that property is. I don't know why your partner priced it at 320. Did an agent tell her to? Did she decide that for herself? But any sellers watching this, please, please, please don't think, oh, this won't happen to me. We've wallpapered the inside of our garage, and that's put another 50 grand on the price of our house. So these poor other sellers, I mean, we feel sorry for them, but we're going to be fine, because our beautiful wallpaper on the inside of the garage means our house is definitely worth that extra 20%. The market decides the price your house will sell for. There are no exceptions to that. The market decides the price your house will sell for. There are no exceptions to that. You can want whatever you like. It doesn't mean you're going to get it. So what I would suggest, the internet blue heart, is that you revisit the photography, make sure it's the best quality photography of all comparable properties, so that people looking for properties like that in that area want to come and look at that one first, because it looks so beautiful in the photographs, number one. Number two, change agent to an agent who understands how to get competing bidders. These agents are going to charge more money. They're going to charge 2%. A good agent will get you sold at market price, and they will charge you 2% because they're worth it. The sellers who I talked about earlier on in the video, the ones that Perry answered the question about how to get their house sold, they said, we now understand why it would have saved us money if we had gone with what they called an expensive agent at the start in February, right? Nearly 9 months ago. Yeah, actually 9 months ago. They said, the extra mortgage payments that we've been paying because we haven't sold on their own have now cancelled out the fee saving we got by going with a cheap agent. Okay, so find a reassuringly expensive agent. Ask them what their process is for getting competing buyers. Make sure they do take beautiful photographs. And then remember, you can't underprice a house. Now, I saw someone put a comment in here going, did Perry really say you can't undervalue a house? What he meant was, if you put the asking price lower than the value of the house, you will get competing buyers who will bid against each other, not against your asking price. So you're not going to sell at an undervalue because you priced it at an undervalue. That was the point he was making, with the important caveat that it has to be marketed properly, because otherwise there is a risk that you undersell it. Okay, so hopefully that helps. Lots more questions, and we're now well over the hour mark, which I fail. I was trying to keep this into an hour, but there we are. Sir Fleshmorph on YouTube says, question, house I really liked but didn't view, withdrew from sale last year. no buyers. Hasn't come back for sale yet. Is it bad to contact owner directly with a cash offer? It last sold 27 years ago. No exceptions to this. Always make your offer. Even in these circumstances, if you know where the property is, make your offer. Put a note through the letterbox. There's no law against it. No one's going to be upset by it. They might be offended by your low offer. But what have you got to lose? Always make your offer. If it's a home you like and you want to live in it, there isn't a reason to not make an offer ever. Will Marsh says, if your mortgage lender's valuation is less than your offer, does that mean you overpaid? Yes, it does. Now, there are some people who you can say, don't care. I can afford to overpay. I want to overpay. I don't want to risk losing the house. The seller won't sell it for less. And this doesn't mean that you shouldn't buy it. It depends on your circumstances. It depends on how stretched you are and the risk. Okay. So, but yes, if your mortgage lender valuation is less than the offer, it doesn't mean you overpaid. Yeah. Could the lender valuation be wrong? Could it be too low? Possibly, sometimes. But generally speaking, if you're paying more than a lender says it's worth, you're paying over their perception of market value. You might be happy to do that. There are reasons that people pay premiums for things. Okay. But that's the answer to that question. Okay, last two questions. Ritori91 says, any advice for first-time buyers looking in Airbnb saturated areas? Most suitable small flats are presented as Airbnb investments, sometimes illegally, with properties taken on or off the market seasonally. Yeah, my advice is go and view them. Go and view them. Always go and view them. If it's a property that you think you might like to buy and you might like to live in, go and view it. And if it's on and off the market and it happens to be off the market and you like it, go and put a note in the letterbox. You don't have to wait for a property. I've heard many anecdotes in my life about people seeing a house that they loved and they go and pop a letter through that just says, listen, no idea if you're thinking of selling or not, but if you are thinking of selling, we'd be very interested. Here's our number. Okay, so you can do that. But the advice is always the same. Go and view, because when you view, you'll hear from always just go and view. It's the only way you'll find out what's actually happening. Agents will do that when they're talking to you. And a lot of it's guff, but you will find out what's really happening in the market for the properties you're interested in. So go and view and make your offers. Chanson Papillon says, what is your opinion of the modern house? They charge a 2% fee. If the market decides the value, no exceptions, is it better to go with a good local agent? The market does decide the value, but what's really important is that how well the property is brought to the market by the agent will determine how much notice or attention is paid to the listing by the market, because there's so much competition from other properties. Okay, so if it's an agent that's just listed at an overprice and there's just the occasional viewer and the occasional offer, they are not discovering the true market for that property. Only by getting competing bidders do you discover the true market. So if, generally speaking, a 2% fee agent that's getting that fee, like Perry does, they get it because they consistently deliver better results than crap agents. Better results means they sell sooner and for a better price. And by the way, the difference in price achieved between the best agents and the worst agents is at least 5%. I shit you not. It is at least 5%, which is why always, if you have a good agent, a really good agent knows their stuff, always pay their fee. Good agents are worth their fee. Why would you entrust the negotiation of a sale of your largest asset to someone who can't even negotiate their own fucking fee? I've never understood any seller who thinks it's a good idea to go with a cheap agent. You are consciously choosing someone who's unable to negotiate a good price for themselves. How good do you think they're going to be at getting you a good price for your house? Cheap agents are always to be avoided. Always to be avoided. Yeah, so Charles and Papio, you've gone on to say they can be quite good at getting. If they are getting 2% and you can see that they're selling their stuff, they're probably worth it. It's always better to go with a good local agent, provided they've got a track record of selling what they list. It doesn't matter how many properties. Don't choose an agent because they've got the most properties for sale. Because if they're not selling them, they're a shit agent. Savkin asks, if it's high loan to value, like 60%, you mean high deposit, don't you? So low loan to value. Lenders will be happy to lend even if you're overpaying, right? They're 60% is safe, generally speaking. And I'm not a mortgage broker, but that I do I do believe that is the case. Okay, this is very definitely the last question. Nikki Nike, would auctions get true market value if all sales go to auction? When you put a house in at an auction, you don't get the whole of the market looking at it. You get people who are comfortable buying at auction. It's a bit like car dealers. You don't get car dealers paying retail price for the cars they're selling. They're buying them at trade price because they are experienced buyers of cars and they know what they're doing. They know how to add value to them and then sell them. And that's what's happening in auctions. Okay, so if you're selling at auction, there are times when you need to sell at auction as a private seller, right? There are times you need to, but generally speaking, you are not going to get as good a price as if it's marketed very well by an agent that knows what they're doing and they market it at the price that gets the interest. Right, guys, I'm now going to move on to the final section of the evening's weekly workshop. I hope this. I'd love your feedback, by the way. I'd love your feedback. Please, could I have your feedback in the comments below? Suggestions, feedback, because the format of this is going to evolve. Did you like it? Was it good? Have I stuck just to moving advice? And can I please remind everybody, let's just get back up here, to put your questions. If you're watching this after the live, put your questions in the comments underneath this video on YouTube. The most liked question from this week will be the first question I answer next week. All right. Provided it's a moving question. So please send me in your questions for next week. And please, no one ever does it. And I understand why, but I will respect your privacy if you want to remain private. Thank you, Jean-Marc. That's very kind of you. Thank you. Please send me your questions by video if you're happy to do that. Okay, you don't have to reveal your identity or anything about the area you're in, just enough for me to be able to answer your question. But send me your video clips if you're happy for me to play them on the Movers Workshop and really bring it to life. I hope that this show is going to grow. I'm now going to be asking you, if you watch my videos regularly and you aren't subscribed to my YouTube channel, could I ask you to subscribe? Because it really, really helps. If you enjoyed this video, could you please click the like button? Because that also really, really helps. And if you want to make sure that you never miss a future video, could you click the notification bell as well as subscribing? These three things really help to spread the word and grow this. And I don't want anyone buying or selling to go into the snake pit that is the moving market without being armed with my moving advice first. Because as lots of you have told me, there is nobody else doing what I'm doing. This is the only place on the internet where you will consistently find the truth about what's happening in the housing market. Thank you, Leslie Ann. That's awesome. Thank you. Appreciate that. So please, if you enjoyed the video, give it a like. Please subscribe if you haven't already. Please click the notification bell. Please share this video. Just share it on any social, wherever you're watching this now. Share this video on your socials and say, anyone moving house, make sure you check out Moving Home with Charlie. He's here to help. If you're an agent, check out bestagent.co.uk if you're a mover as well, because for those of you who are new here, I haven't even told you what the rest of my day job is. This isn't my day job, by the way. Bestagent.co.uk, it's where I try and help movers and agents work better together. It's where I'm building the nation's first public house price index. And thank you to those of you who have been submitting your house prices, your exchange prices. I had some today. Fascinating. So the best agent house price index on that URL right there, bestagent.property/HPI, is going to be the only whole of market house price index that's as accurate as the land registry, but 6 months sooner. So people really know what's happening. And it helps to blow apart the house price guff coming from the rest of the industry. If you missed the beginning of this, I'll be repeating myself here now. If you're a mover and you would like to contact me directly, I have direct personal access. The cheapest way to do that for guaranteed response is to join the Movers Q&A club. It's £15 a month, and it gives you unlimited access for private messages, which I guarantee to answer. Sometimes it takes me a few days, but I'll guarantee to answer all of your messages if you remember. And it also gives you access to the twice monthly live, private, unrecorded video conference where we will all be in a video conference room together. Okay, and if you want to join that, the link is below, but I'll also put it up on the screen again as well. I'm just going to share the screen actually. Okay. Oh my God! I've almost missed the most important part of the evening. I haven't played Stig's. I can't believe no one told me about this. He's going to kill me. He's going to kill me. Right. Oh my God. Oh my God. I deserve a penalty for this. Right. Let me just. So we have one more segment of this show to come, and it is this. And it's going to be every week, a regular weekly slot from the Stig, Housing Stig. Here he is. I'll put him up on the screen there. That's the only photograph on the internet of Housing Stig, who is as nuts as he looks in the best possible way. And I asked him this week what he wanted to talk about. And he said, Rachel Reeves is going to redefine what the national debt is. Well, I've got a thing or two to say about that. So here we go, boys and girls. I've just got it just on audio. Why can't I find it? There it is. Here it comes. Here it comes. Here it comes.
Hello, Charlie. So my first ever Stig Says recording session. I couldn't let it go. As you know, public debt is something close to my heart. And I just keep seeing stories about this £22 billion black hole that Rachel Reeves has discovered. And more recently, the fact that in order to get round this, there is talk about changing the way that we measure public sector debt, which, you know, talk about shifting deck chairs on the Titanic. Let's put it in perspective. 22 billion is about 0.8% of the 2.7 trillion of public sector debt that we already have. To put that another way, if everyone who currently works, circa 35 million people in this country, had to pay the 22 billion, it's about £600 each. Whereas we currently have outstanding over £75,000 each. You know, those numbers are significantly different. And it's one of the reasons why I think investment in this country, or from the citizens of this country, is so hard, is if their money isn't tied up going into taxes, it's tied up paying for their housing, because the housing market is massively overpriced. And the idea that we're just going to reassess the way that we measure public debt so that we still meet our fiscal rules kind of blows my mind. I've got to be honest. I just find it a bit sad that we're worrying about what is such a small sum of money in comparison with the vast sum of money. And one of the ways they're looking to do this is not include the losses from quantitative tightening. So back in the day, we had quantitative easing and lots of money was made available and plugged into the system in order to prop it up after the crash in '08. And banks didn't release much of that, and it didn't filter down, which is why we had a wage crisis and all the rest of those things after that time, but not very much inflation until COVID times. And of course, the Bank of England has been trying to rein that back in. and they've been performing quantitative tightening, so removing that from the system by selling it on at a loss, which the public have to make the Bank of England whole for. So the Treasury keeps sending them our money. And if they remove that, yeah, it'll give her some room. It may solve the entire 22 billion. I'm not sure. I haven't done the maths, but it's got to be a reasonable amount. It must be nearly that. But it goes further. I read an article, I can't remember where it was, but I think it was by a guy from the IFS, who said that they were actually looking at potentially the 200 billion of student debt, which, because we fully expect 65% of students to pay back their debt in the long term, is not realized. And so therefore it doesn't really show as 200 billion of debt. It's a much lower figure, and therefore we could exclude it entirely, which would give her a huge amount of money left over, a surplus against the 2.7 trillion of actual debt. It's a mad world, Charlie. It's a mad world, and I hope we're not the Titanic, and I hope these aren't the deck chairs. But it blows my mind that it takes so much time and so much print has been spent on what really I don't believe to be that newsworthy. Anyway, good luck with the channel. I hope everything's going well, and I'll catch you later.
That's what sober Stig sounds like. That is not what he's going to sound like when we're talking on our private. So now listen, for those of you who are like, oh, Charlie, we're not going to pay 20 quid a month for this. Is you and Stig Babylon. Someone called us a pair of fat yars the other day, which really made me laugh. But so this is going to be every week. Stiggy is going to be sending in his thoughts about something like that. But also, we'll still be doing the occasional appearance sporadically, talking about the market and the economy on my regular weekly shows, which are public available to everybody. They'll be as and when there's something relevant to do. But if you want to join myself and Stig and put questions to ask and pin us to the wall and have as long as you want talking with us, then join the club, which is on the same page on the Moving Home with Charlie Buy Me a Coffee page, right, which is here. So this is what I was saying, right? So 15 quid a month if you want to be, if you're moving home now and you would like me at your disposal to help you out with your, whatever conundrums you're facing. If you think it's worth it, I'd love you to join the £15 a month Movers Club. Twice a monthly live video conference where I will be with you live in a private video room with all the members of that club. Okay, having an open discussion, answering whatever questions that you've got. You can all ask me your individual mover questions, asking anything else you want in that. And that's going to be every other week starting 2 weeks today. No, sorry, starting next week. So Wednesday, the 9th of October, will be the first one of those. So please do join the live stream Q&A movers group, and I will also answer your private messages. You can also message me privately through that group, and I guarantee to respond to all of those private messages. It sometimes takes me a few days, but I always get to them. But if you'd like to make sure that Stig doesn't run out of wine, then Stig and I would be very grateful for anyone who wants to join us and talk about all kinds of stuff. And like it says down there, twice monthly wine-fueled debate about the state of the world. No topic is off limits. Sex, drugs, rock and roll, crypto, history, classics, arts, film, crime, politics, economics, and media. Put your questions live to Charlie and Stig, but be prepared for blunt answers. Yes, we will be turning the air blue. And we're probably also going to create a member-only private messaging group as well there, where we can, on Telegram or WhatsApp or something like that. And there's been talk, actually, some of you have already said, could we have a dinner meetup? Yeah, we'd be up for that. That would be cool, to actually have the occasional, however often, occasional dinner and meetups, people who want to meet up and chat. Because honestly, the reason this fella here is one of my lifelong best friends is because he's one of the most fascinating human beings you'll ever meet or talk to, as well as being delightfully batshit crazy. Absolute Fruit Loop in the best possible way. Thank you, Neil. That's wonderful. Really, really helps to know. And I this is what I'm here for, guys. I'm here to help de-stress your move. I'm here to help you when you think you must be going mad because everyone's telling you stuff that just doesn't make sense. And I'm here to help when that happens. So yes, please like the video if you haven't. Subscribe if you'd like to hear about the future videos. Click the notification bell. Help me spread the word, please, 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 because if you value this advice, you can help amplify this help by spreading the word everywhere. That movers, anyone, you don't have to agree with everything I say, and I welcome all constructive challenges, but at the moment, there are a few hundred of you watching this show live as we speak. I want that to be a few thousand. I want everyone to know that you don't go and move house unless you've checked out the basics. And I'll be providing a lot more what I call library content for just people who are just starting out and want to just know the basics. What do you need to know before you start? Let me, right now, if you're a first-time buyer, don't go out viewing properties until you've got your mortgage in principle and the conveyancer selected. None of you listen to me, or very few listen to me. But if you do listen to me and you do what I say, when you put your offer in using my offer email template, your chances of it being accepted are much, much higher. As a seller, choose your agent like your future depends on it, because it actually does. Do not overprice your house, because it will not help you get more money for it. It'll just make it take longer to sell and make people think you want too much and put interest off and give you less chance of getting competing buyers. Right. I've got one last question here from Annie, anonymous. When a listing says investors only, what do they mean? What they mean is it's not a mortgageable property. So you're either a cash buyer or you ain't buying it, is what they mean. That's what that means. All right. Thank you so much, everyone, for watching. Josephine Murphy, Leo Least, Jay, Argy Bargy, Josephine. Yeah, changes coming. Annie, Ty Gonosaurus, hi there. Jean-Marc, Leslie Ann, Nikki Nike. Some new names there as well. Really, really cool. Thank you so much for taking part. Thank you for taking part in the live stream. Don't forget, you can also listen to this on audio podcast. The audio from this will be uploaded to my podcast channels. Oh, wicked. Ty Gonosaurus says, Charlie, I used your mortgage broker. They are fantastic. Thank you. I know they are. That's why I picked them, okay? Because I trust them not only to be good brokers, but to give you really good advice and to be trustworthy. That's why I picked them. So if you can't find a good, trustworthy, independent mortgage broker, then I've got your back, right? Go to my website, links below again. Otherwise, mhwc.co.uk/mortgage. Pop the details in and talk to them there. I also work with amazing conveyancers. If you need a conveyancer, if you're a seller, get your conveyancer first, get contract ready first, then talk to agents. You will get a lower fee and it won't cost you any extra. So yeah, conveyancing also there, and property search packs. We'll do special episodes. So each week is going to have a different focus, but it's all going to be about the nitty gritty of actually moving. We won't be talking about the market. We won't be talking about the economy. We'll talk about the nitty gritty of moving every Wednesday at 8 o'clock. I've enjoyed this. I hope you have. I hope you will support the show and spread it. I hope you'll follow me on Twitter, moving_Charlie, or X as it is now, which is where I interact most with people. And otherwise, all that remains is for me to take Alex's handsome face off there, put my Moving Home with Charlie logo back up, wish you all a very peaceful night, a good night's sleep, lots of